What is up, guys? Welcome back again. So, you're thinking about investing in StashAway, or you've already invested in StashAway and now you're wondering what your tax implications are. In this video, I'm going to go through really quickly and also concisely on what the taxes you should pay or if you should pay any taxes. So, let's get it going, guys. So, the first question to us is, do I have to declare my capital gain tax? The answer would be nope. You do not have to declare your capital gain tax in Malaysia or if you're investing with StashAway in Singapore. Second question, is my investment in StashAway automatically taxed? Well, this answer is not as simple. The quick answer is yes, but there's a caveat to it. So let's go through some examples on these two questions. Do I have to declare my capital gain tax? Let's say, for example, in the year 2020, you've invested and chosen the 36% risk index portfolio with StashAway. And you've put in $100 right inside. And after a year, your gain went up, or that $100 that you put in after 1 year went up all the way to $250. So guys, that's pretty impressive. That's more than 100% return. That's really good, right? But obviously this is just an example. Now, your capital gain tax would be $250 minus $100, right? Your capital gain, sorry, not tax, capital gain. So it would be 150 ringgit. Now, you will ask, do I have to declare, do I have to pay any taxes to the Malaysia or Singapore government? No, guys, the answer is no. Because in Malaysia and Singapore, these are one of the very few countries left in the world that are, you could classify it under tax haven, right? So let's take a look and see what tax havens are. So I've Google search, and you can see this article here, right? Oh man, how did I get rid of it? Okay, 9 aspects friendly countries with no capital gain tax. And obviously down in the country you can see these, right? Number 9, Switzerland. Look at that. What do you know? 8, Singapore. That means all the gains that you get from your stocks, from your brokerage, you do not have to pay more taxes on it, right? The Cayman Islands, Monaco, Belgium. What do you know? Malaysia is just right here, right? So you can see the list goes on: New Zealand, Belize, and Hong Kong. So we're actually, I think there's only 3 Asian countries here, right? And Malaysia, Singapore, and Hong Kong. So this is one of the only 3 Asian countries that does not have a capital gain tax whenever you invest in the stock market. So let's get back to our example, right? So the first question is basically no. So take advantage of it, guys. While the law hasn't changed, I believe it will. It's just a matter of time when the government needs more money or whatever, they will start to tax. Because in the US and Europe, whenever there's gain and you would sell it, you would have to pay taxes on that gain. But over here in Malaysia and Singapore, not yet, right? So second question, is my investment in StashAway automatically taxed? Well, let's say, for example, you've invested, right? And what happens is 30% of your total dividend would be taxed. So for example, in the year 2020, you invested $50, right? 50 ringgit. Or you receive 50 ringgit of dividends, right? So what happens is StashAway would automatically tax 30% of that $50, which is 15 ringgit. I just recorded this video again. I made a mistake, and thanks to one of my subscribers for pointing it out. But so you were taxed $15 total, right? So basically $15 is taken out of that $50 that you get, right? 15 is taken out of that 50 that you've gotten. So in StashAway account, you will not see $50 that would be in your statement. Instead, you would just see $35, right? That will be in your statement. So this is how it will work, right? And this is not unique to StashAway. This is something that the US government has imposed whenever a foreign investor invests into the stock market. Any of that dividend would be taxed 30%, right? 30% of that dividend would be taxed. Now, don't get confused with the capital gain. Capital gain will not be taxed. It's just dividends that would be taxed. So just to summarize this whole thing, right, guys? The conclusion here is that first, we're living in a country that has no capital gain tax. So make use of it. The best time to invest is yesterday. The second best time to invest is now, right? So start and start and start. look at my description link down in the section below, and you can sign up with StashAway over there. Secondly, right, you would have to take note that 30% of the dividend would be taxed. And what are dividend giving stocks, right? The dividend giving assets are usually, right, safe assets like bonds, right, like a fixed investment trust, right, and those are usually presented in the lower stash away risk portfolio. So just bear in mind that when you invest in the lower, let's say 6% all the way to 15%, you have more dividends in it, and those dividends are taxed. Whereas, for example, the higher percent risk index is less dividends paid out. Instead, it's just capital appreciation, hopefully, those, right, so you are not, overall you're not taxed as much. So that's just my summary, guys, and just that's all for now. If you like my video, click like, subscribe, and share my video, and I'll come back with you guys on another interesting video next time. Thank you.